Welcome to another episode of the Power Law Investor. Today is the 20th of June, 2025. And as I make this video, Bitcoin is trading just about 103K, and Kaspa is trading at just a little below 7 cents. And what I wanted to provide today is an update on the risk metric table that will help you guys and myself make better investment decisions about when is a good time to get into and out of Caspa. So when do I want to start loading up more, and when's a good time to start lightening up? So based upon the past history of Caspa itself. Again, this is not financial advice, so do your own research. I'm just giving you my perspective and some information. So let's start off with where we are in terms of the Caspa price. This is the long-term Caspa price that we're seeing. It ranges all the way from starting in July 22nd, 22, all the way to that today, which is June 20th. All right, all right. This edge over here. We can't really see it, but it's there. And so what the risk metric does is it gives us different values it looks at the price, figures out this is where the price is. This is based on what it has been doing historically. Is this a good time to buy or not? And produces a number from 0 to 1. 0 is saying that it's a very oversold asset that now is, historically speaking, a very good time to buy. And the 1 would be a good time to sell, right? And the same thing is it's not looking at anything else. It's only looking at the history of Caspa itself and using that to figure things out. It's also a real-time metric, meaning that it's only looking back upon the history of time that has already passed. I'm not changing these numbers based on today. So if I got the number a month ago, I'm not changing that based on what I've seen from that 1 month to today, because that would be after the event, right? Sometimes you'll see these graphs that are perfect in hindsight, but they aren't accurate in telling you what actually should be happening in real time. What are the values you see? So the values that you see here, much more clear on this graph over here, uh, are the actual values that you would have seen in real time. And the key thing to realize, the risk metric goes from cold to hot. And the colder it is, the better time it is to buy. You can also look at it the other way around, that you'd want red on the bottom. But blue is a good time to buy. The darker the blue, the better. And red is a good time to lighten up. Right? And this metric is much more sensitive to the bottoms than it is to the tops, because in the tops, we are expecting really high Casper prices, even relative to what's happened historically. So the algorithm can't see that, it can't predict the future to that extent. It does have some ability to do that, but it's going to be better at predicting the bottoms and telling us, reacting to the bottoms rather than the tops. And to keep all that gobbledygook simple, the bluer it gets, the better of a deal it gets, right? If you look back on this, you'd have gotten a signal around in November when it was around 11 cents, and then you saw the price shoot up after that. Then you saw a signal again start up around 9 cents in February. You had a bit of a price increase after that, and then finally from April, you got the signal a few times, which was saying, hey, now's a good time to lighten up, or a good time to buy, and then you got the time to lighten up. So buy in the blue, base for Caspa, sell around the yellow, and once you get around the red, really think about lightening up. That sort of theory. And what does that tell us about our current situation? Well, we've been having a lot of movement in the market lately, seeing that the price has been moving around. Let's look at the 7 days. And we were all the way up to 8 cents, and now we're down to about 6.8 cents. So you're seeing some good movement. If you look at it, particularly with the context of a month, you've gone down almost close to half right now, right? And so if you look at what the signal was saying, the signal is saying, hey, when we were up around 12 cents, it was giving a yellow signal, right? You can see that was around over here, right? I think date matches correctly. So it's March 22nd, and we look at this, and this would be around March. The peak it would be giving is around the 13th of March, 13th of May, excuse me. And if we go back and look at the 13th of May here, you kind of see that, hey, it was peaking up around that point. So you'd have gotten that signal in real time. Now, it's a little unfair to sort of think that you would have caught the exact top, just like we can't catch the exact bottom. It's really an indicator to start selling or start buying. So you don't want to be buying all in one chunk and, hey, let's deploy all of this, all of my capital. It's sort of built into your position. and maybe deploy it over the course of 10, 15 days or something like that. That's what it seems like, right? So the theory would be, let's wait for the risk metric to drop below 0.2. Once it's dropped below 0.2, let's start deploying 5 to 10% of the total amount that I want to deploy every day. And then see, and that should give us much better risk adjusted returns. As you can see from this kind of color coding here, that would have worked very well, right? Or definitely better than buying and holding. It's not the perfect strategy. Nothing, we can't predict the future, so we can't call the exact bottoms or the exact tops, but it gets you pretty close. And it's definitely what I am using now for my investments going forward. Where is the zero point 0.2? Like I've said before, the 0.2 risk metric is around 6.3, 6.4 cents. This changes every day, and I'll provide these updates for you guys on my YouTube channel, and you can also check in on my X channel. And soon, do sign up for my website at powerlawinvestor.com so you'll get email notifications of when there's a new update available. That's the process being setting up. So right now we are almost at the zero point 0.2, but not quite. And my plan is to wait for 0.2 and then start DCAing in. I suspect that if we look at the altcoin market versus Bitcoin, we are still going downwards, right? And I don't think this really changes until we start getting more formal quantitative easing and really lose monetary policy. So I think there's a good case now for Bitcoin to be doing quite well. And given all the instabilities in the global financial order, Bitcoin is now being seen as a more attractive option than it was in the past as a completely speculative asset. But that hasn't necessarily translated into the altcoins getting the same amount of activity, right? And so what I suspect, and I can't, and I think there's maybe about a 70% probability that this happens. Uh, or let me take that back. I think there's about a 50% probability that we end up going down considerably further, and then we turn around and start taking off. And that doesn't happen when quantitative easing kicks in. And I could easily see another drop of, 20%, right? If we went 20% from today's Kaspa price, which is about 6.8 cents, you're looking at maybe about 5.5 or so, right? 5.5 cents. Maybe Casper will go down a lot more. So I think there's a good chance that we get towards below zero point 0.1 on the risk metric also. And so when that happens, I'll be getting the risk metric itself will update. It updates once a day. And then that's going to be my signal to start increasing my DCA. I don't know how long we stay in the zero point 0.1 to zero point 0.0 region. And there is a chance that we go even below the zero point 0.0 region. But those would be great opportunities, because what I think is going to happen with that 50% probability is that we just end up taking off after Bitcoin sorts. Bitcoin's going to peak up. A lot of people are going to move out from Bitcoin and want exposure to crypto. That's what we have when we call Altseason. That's when I think the prices really take off, right? So that, I think there's about a 50% probability that's happening. If you look at the power law, and I have videos on this in the past, I think it's quite conceivable that Bitcoin gets to between 150 and 200K, and that is going to have an impact on the altcoin market. The timing is hard to call, but my best guess is going to be Q4 25 to Q1 26, and that's where I think we see a lot of the action happening. If that's the case, buying at below zero point 0.1 risk level is really good. So I would start nibbling at zero point 0.2 and then really wait for zero point 0.1 and then start to deploy the bigger chunks of capital if you want to really try and get the lowest thing. The difficulty with this approach is that I can't tell, even with my approach, is how long and how low we go. So right now we're at 0.244. In fact, we look at the table and it says today's value is 0.231, right? But I don't know whether we go down to 0.2. I don't know how likely it is we go to 0.1 or even lower than that. So those are questions that we have to think in terms of, hey, am I okay with missing the boat? And can I get a lower price, right? So you're trying to balance those two out. And the way I would go about it is that you keep on DCing in every day, especially now we're pretty attractive risk level overall. 0.25 is not bad, but DC in small amounts and go in heavier as we get closer to zero, right? And again, this is not the floor, but it should be pretty close. if we do get some values below that, it's going to be a really good opportunity. It could happen, but that would mean that we drop about 40% from where we are now. So let's call it about 7. So yeah, so we'd be just above 4.2 cents kind of thing. So that would sort of be about 40% drop from today. So that's kind of where my thoughts are. If we look at the overall, we see that the altcoin market is still dropping relative to Bitcoin. Bitcoin seems to be holding up much better. The altcoins are taking much more of a beating. And again, like I said, I don't think that changes until we hit quantitative easing, and the Bitcoin price will have gone up quite a bit by then, is my assumption. But also, what's interesting now is that Kaspa has gotten fairly stable versus the rest of the altcoin market. So this is Kaspa divided by the altcoins, by the altcoin market cap minus the stablecoin of USDT. And you can see that, yeah, we've had a big decrease, right? The market cap of Kaspa has been dropping, but now we seem to be somewhat stable from about the middle of May onwards. Not really from the middle of May onwards, about a month and a half. So I think that bears well for Kaspa holding up, and I think if we do get opportunities below this, opportunities in the 0 to 0.2 risk band, that's a good time to start DCing in. I think there's a 50% chance we dip and then take off. And I think that there is probably a 25% chance that we just take off without seeing a dip. So that could happen. So in that case, you want to be DCing in regularly so you don't have the FOMO and suddenly want to buy in at higher prices. But I do think that we will get the lower price more likely than not. And I think there's also a 25% chance that we don't get Altseason, right? Events could work out in such a way that the price of Casper never really takes off. It's not my base case. I think my base case is that it does take off, and if we follow the power law, we're looking at between 50 and 70 cents in a year's time. I don't think that is unreasonable, but it's definitely a non-zero probability. I'd say between 20 and 25% that we don't get Altseason. All season is canceled, and a 25% that we just take off from here, and a 50% chance that we drop down and we go above, right? And of course, those are rough probabilities, but those are based on my understanding of the market and how I'm looking at those different scenarios. Because oftentimes I'll find when people are talking about this could happen, or that could happen, or that could happen, we don't assign the weights to it. And that doesn't make sense in my world, but I'd like to assign weights to these different outcomes. I may be wrong. Your perception might be quite different from mine, but that's what that is at this point. So anyway, that has been this episode of the Power Law Investor. Please like and subscribe and comment below as to your thoughts and questions, and I will see you on the next one. So critical point that we are at the 0.231 risk metric. Once we get below 0.2, 0.637, about 8% or so, that would be a good time to start DCAing in. But remember to DCA in rather than throw in a whole chunk. If you want to throw in a whole chunk, of course you want to do it. But for me, the strategy would be to DCA in because I think there is a pretty high probability that we get significantly lower prices, even than the 0.2 risk bet. So that's all for now. Ciao, ciao, and see you in the next one.